All right, what is up, traders? What's up, tycoons? Super excited to bring you guys today's video. Going to give you another update on TLT. We'll go over the weekly chart. We're at a very key inflection point here. We formed a base below this level multiple times and have had nice rallies, but there's two specific levels that we really need to maintain above currently. We'll go over those. We'll talk about how 10-year yields are rolling over. If you've been keeping up with the channel, you know, we initially posted this potential top here with some question marks, wondering if the signals, which we'll cover those signals in more depth later, were going to play out. They did. Um, Most recently, we had a 4-hour trade idea on the TLT chart, the TLT 4-hour chart. That trade idea is working out pretty well so far. We'll talk about these different signals and when I've posted them. So you guys just have a little bit of, reliability or credibility to some of the things that I'm saying, right? I'm not just talking about things in the past after they've happened, but trying to give you guys really good analysis on what could happen in the future and things to look forward to, right? So we'll reference the things that happened currently and where they were previously when we talked about them, such as the oversold reading on TLT. I went into a nice post about how TLT saw its highest oversold reading in over a year and how most likely that wasn't going to be a bottom and how we were going to continue dropping lower. We also talked about and have talked about for years now on the channel the bearish signal, which was the MACD. We'll cover that and review some of that in detail. All of that to just really bring us back to our not our most recent, but our previous most recent trade idea on TLT was along on the base breakout and bearish channel breakout targeting up here right around 94.33. And we officially hit that price target within the last two trading days. So that was a really nice one. We'll go over the original post and review that and how you can see TLT was trading below those levels at that time. And now currently we're back at those. So just to give you guys a little bit of the thought process and how I come up with some of these trade ideas. But there's also lots of really great stuff we want to talk about. All right. The NASDAQ is hitting new all-time highs. We see it coming up and crossing above a key long-term Fibonacci level here. All right. Even on the daily time frame on a short-term Fibonacci level, we see us breaking out above that level. We'll review my thoughts on the NASDAQ. I went over them very clearly in the Discord and it seems to be playing out very well. Small cap season, okay, that's another big thing we're going to talk about here. This was a trade idea, post essentially just on IWM, just saying that things were going to get back to their previous all-time highs. And you can see that worked out very well on a monthly basis. Okay, the IWM Russell 2000s have hit a new all-time high. Equal weight is hitting new all-time highs. Financials are hitting new all-time highs. Industrials hit new all-time highs recently. We see transports breaking out to and pulling back here. All right. We've got technology at new all-time highs, and technology has actually been relatively weak. Okay. We'll dive into this a little bit more in depth, but summer highs in the NASDAQ peaked, right around this level, and we've seen technology as an underperformer relative to the S&P 500. We'll go into why I think this chart is important and which brings us into the next slide here about how we could see a potential large cap slash mag 7 return to dominance. When you look at the mags ETF, we posted this bullish continuation pattern above a bullish base breakout. We love trading these base breakouts. As you guys can tell from a lot of my charts, I try to keep things very simple, and we love when we see a continuation pattern and the underlying trend is bullish. It gives us even much more confidence. The mag's position is doing very well right now. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I got a completely free newsletter for you guys called Investment Intelligence. You can sign up using the link in the description down below. I'm putting out high quality content in there for completely free. Okay. And I even put out free trade ideas in there. I mean, take a look at some of the previous trade ideas. I love to see it. I've got people emailing me saying, hey, this was a really good trade idea. Hey, I've been following and keeping up with the newsletter. I'm doing well on this position, on this position, on this position, etc. sign up for that. Okay. There's a website associated with it. You can read some of the previous articles and check out and see if it's something that you guys want to subscribe to and get those sent directly to your inbox. You can also join the Investment Intelligence Private Trading Group using promo code Powell. That will get you guys a nice little discount on the private trading group. Inside of there, we've got 20 plus swing chart ideas every week, custom scripts and indicators, exclusive intel, and exclusive chart layouts. So there's a lot of different things inside of the Discord, and when you get the full access, that's what you're going to get. All right, and these are some of the options returns from some of the different products and tools that we've brought inside to the Discord members. One of them is the Pulse Radar, okay, which is a custom script indicator, and it also comes with a custom scan based off of that script. So you get access to not only the indicators and the scans, but you also get access to my analysis on the stocks popping up inside of those scans every single week. All right, this is a good example of PCG talking about the inverse head and shoulders, and we blew past all of the bullish price targets here. Really, really good returns. We have the zone finder. Okay, all of these are available for purchase separately, so you can get into just the pulse radar if you're someone who's looking for 2 week to 6 week trade ideas. If you're someone who's looking to be much more active and looking for intraday to 1 week, 1 day to 5 day swing trades, the zone finder is going to be for you. All right, we actually debuted the initial zone finder trade idea when it was first published out here on BMY, Bristol Myers, and this ended up being a very, very good trade, netting really nice returns on the options there. Now let's go ahead and get into the video. All right, enough about all of that. We'll start off here with TLT on the weekly chart. Now, as I mentioned, we're going to reference some things in the past in today's video that I posted to the Discord members so that you guys get a good idea of the concepts that I'm talking about. And we try to be proactive, in anticipating, what are the signals that we need to catch the right moves. And so from a longer time frame, right, we have this key Fibonacci here at 92.83. We've seen us form a base here and rally up higher. We're currently forming a base, breaking out above that base. All right, and we've seen a base form here and also a little one here, more of a dead cat bounce. But still, 92.83 has been a key inflection point. All right, whenever we can bottom out below that level and break out above, we've seen some nice price action in the TLT. But what's more important than that, okay, is the VWAPs, the anchored VWAPs specifically. So that's what these purple lines are, right? We've got them anchored here to the October 2022 highs, and then also the essentially the October 2023 lows. So the previous highs and the previous lows of the cycle in TLT, we've anchored the VWAPs there. Now the VWAP is your volume weighted average price. That may seem like a complex term, but the way you use that indicator is above a VWAP. Bulls are in control. The average buyer is in profits. All right. Below a VWAP, the bears are in control and the average, seller is in profit. And take a look at where we're at right now. We're closing just below that anchored VWAP from the highs, and we're closing just above the anchored VWAP from the lows. All right, this was a good signal for us last time over here when we were trading at this place. We wanted to see if we could break out above and target some longs up to the 99.27 level. And sure enough, that hit. That was a really nice trade idea. And so here we are back at that same level. Not only have we formed a base above our key base level that we want to see us forming that base and breaking out above, we reclaimed the anchored VWAP from the lows. So we're trading above that anchored VWAP. And now we just need to reclaim this anchored VWAP from the highs, which roughly going to be around $95. Okay, so let's just call it 95. If we can get above that anchored VWAP, then the odds look good of us rallying back up to 99.27. So with the current levels at 94.39, you put a stop under this 92.83 level. Maybe you just call it 92, and you risk about $2.40 to potentially make about $4. So nearly a 2-to-1 risk to reward ratio. That's just some quick math. I'm sure you can define those levels a little bit more precisely by putting on some more precise targets on there. But that's what I'm looking at, right? And essentially your confirmation would be, a weekly close, because this is a weekly candlestick chart above this anchored VWAP, right? So that's one of the things that I really want to see. Below this anchored VWAP, even though we have formed this base, okay, and this is a bullish setup, right? We've seen bullish setups arise from forming a base and breaking out above this 92.83 level. The bulls aren't completely in control. We also have a declining 50 week moving average, which is also not a great sign. Okay. You want to see a rising 50 SMA, right? Notice how once we started trading above here, we started to have a rising 50 SMA, right? Rising 50 SMA as prices heading higher. Currently, we're in a declining 50 SMA with also a declining anchored VWAP, right? So we want to see those things start to curl up higher. We want to see us start trading above that VWAP. Now let's move on and let's talk about the 10-year yields, the TNX, right? We were looking to see if this signal that has occurred once, twice, and now a third time was going to play out again, and we're going to see a sell-off in Treasury yields. And that's exactly what we ended up getting. So history did repeat itself. And one thing I do want to mention to you guys is that every time we've seen us break the 50 SMA on the daily chart for TNX, what has it done? It's been very sloppy, right? We see it sloppy over here, but ultimately it resolves to the downside. Same thing over here. We break through the 50 SMA, but it's sloppy. We have a sharp rebound. We come back again, test it, come back again, test it. But ultimately, we put in a low and then a lower low. So the Treasury bulls, all right, and if you're bullish on bonds, this is a good start, but ultimately for confirmation, you're really going to want to see us make lower lows on yields because that's what's happened the previous times that we've had this bearish divergence on the RSI with a topping pattern on the daily candles, right? And so now we're on our third time. And each time we broke through that 50 SMA after getting our signal, we ended up putting in lower lows. That is what we want to see ultimately, if you're a bond bull. So things could get sloppy here. We could see TLT start to whipsaw. We just went over that weekly chart. We've got a lot of key inflection points, right? We've got those anchored VWAPs. We've got that 92.83. We've got a declining 50 SMA. So it may not be pretty, right? Things can be pretty, and we could just break out in bonds. But I would expect some volatility and to try to keep an eye on the bigger picture in those weekly time frames. Look at those weekly candlesticks and where they're closing, rather than so much of the short term. It doesn't mean that there aren't short-term trading opportunities, right? We love trading a nice base breakout. We had an initial base breakout here. And what did we do? We actually formed a base above our base breakout level of 93. That's very beautiful. On top of that, we had a bullish engulfing outside candle. That is this candlestick right here specifically. So if you take a look, the open is below the prior candle and the close is above the prior candle. So this is not only an engulfing candle, but an outside candle. And this typically leads to further bullishness. And so we're targeting this gap fill up here at $95. We just barely missed it here recently, but above that 94, this trade idea is still valid, right? And it's all about just having those key risk defining levels. And we talked about this on the 4th, on December 4th at 1:30. In the Discord, we posted this, right? We've got the base, then we've got another base forming above our base breakout levels, talking about the bullish outside engulfing bar. If we can break through 94 resistance, which we battled that for 4 days in a row, a breakout above 94, we're going to target the short-term gap fill at 95. And, you know, people misuse the RSI. So we're going to revisit this again. I've talked about it before on the channel, but back on October 12th, I talked about how TLT is at its most oversold rating it's seen in well over a year. While oversold can often lead to a bounce, people fail to remember the purpose of the RSI, which is determining strength or weakness. It's a relative strength index, right? The last two times the RSI was oversold, we ended up going lower. And I spoke about how that was a likely scenario for TLT back when it was trading right around $400, or I'm sorry, $94. That perhaps we end up lower in the coming weeks with a bounce up before dropping lower. And pretty much that's exactly what happened, right? You can see right around here, TLT ended up bouncing up a little bit. We talked about our RSI signals and different things like that. This is on that same day, actually, on the 4th, or I'm sorry, a week before. So this is on the 12th, and then we have on October 4th, we're following up on a bearish signal that we gave. All right. Now, if you've been a fan of the channel, you've been watching the channel, you guys know that the daily MACD, so the daily time frame MACD is a really good, reliable buy and sell indicator on TLT, right? And I highlighted, the bearish crossover here, further downside, right? Bearish crossover here, further downside. Bearish crossover here, further downside. Bearish crossover here, further downside. Initially, what we had seen, since the summer was a 2 to 5 day sell-off when that happened. And I said it will be interesting to see if we continue to see that 2 to 5 day sell-off or if we see a sustained sell-off. And so on October 4th, I ended up following up with that, mentioning how we filled the first gap down to 95 and how there were two gaps down still to fill at 94 and 91, even one all the way down to 85 to 86 that we need to be cautious of, and that we're going to wait for a clear bullish crossover on the MACD, which should be a good buy signal for TLT to avoid catching any falling knives, because that's what we're trying to avoid, right? Maybe we weren't necessarily shorting the bond market off that sell signal, but rather that's a confirmation for us not to be looking for a buy signal. And so I'm following up with that, okay, and bringing that to today's video because we did get that bullish crossover. And, that bullish crossover was one of the main points of our thesis and a long trade idea for TLT, with this nice base forming here, with this nice bearish channel. Okay, looking for a base breakout out of the base and also out of the bearish channel. And you can see we gapped up right above it and we had gotten a bullish crossover on the MACD. So, over here, when we're, mentioning, hey, there's a bearish crossover, we're going to wait to avoid catching any falling knives. We talked about how there was a gap down to 91 to fill. Look at where that base was. That base level was right around $91. And that's when we ended up putting in a bottom here and breaking out above, and we got a bullish crossover on the MACD, also with a bullish divergence, right? Where we can see prices clearly, making lower lows and lower highs, but the RSI is making lows, higher lows, highs, higher highs. So a lot of these things form together. That trade idea worked out really well on the TLT, again, hitting the price target here in the past couple of days. And this was the initial post, right? You can see it's in the SPY QQQ IWM TLT room of the Discord. And we talked about how the flip side, of the bearish gaps down to fill. We said for the flip side of this, we have gotten a weak MACD crossover, and there are a lot of gaps up to fill we have created during this sell-off, highlighting all of the many gaps up to fill, just as we highlighted all of the gaps down to fill when we had a bearish crossover. Okay, and you can see the initial setup here with the breakout trading above $91, looking to target that 94.33 level with the base here, and that trade worked out very well. Okay, so that's my thoughts on TLT, giving you guys a rundown of, how prices developed, how you guys maybe missed some opportunities on TLT, how you could have seen those opportunities, and then use that information for the, new chart on the weekly, right? And how we want to zoom out now and take a look at a higher time frame, away from the 4 hour, away from the daily, and look at the weekly time frame to see what the broader picture is. And this is a great example of doing so. When you look at the NASDAQ making new all-time highs on a monthly basis here, coming up and crossing above a key Fibonacci level here of 521. This looks great. Nothing about this looks bearish. So, there's a lot of people who are very scared of the market. They're scared of the gains, and most likely it's because they're missing out, right? If you're a part of this rally, you're enjoying this, right? You're not really so bearish, and there's nothing bearish about new all-time highs. What could be more, how can it possibly be bearish than the demand for stocks, at the highest it's ever been, right? Because that's what new all-time highs is presenting you, right? We trade supply and demand markets, and what we're seeing is that the demand is greater than it's ever been in the past for stocks, right? And that's in the NASDAQ specifically here. When we look on a daily time frame, one thing I mentioned, to Discord members a couple weeks ago or a week or two ago was really about this 503 level, right? These were the summer highs in the NASDAQ. And I said, hey, we're setting up a really good trading opportunity here. Okay. Above 503.50, we want to be long. We want to be long. Okay. And we think that the NASDAQ is going to start outperforming. Below that 503.50, we want to be short. Okay. I think it was presenting a really, really good opportunity here right around this time frame here when it was trading in between these levels. And we wanted to see how this resolved. Now we started trading higher, retesting those levels a little bit messy, but we had a trend line here. Okay, and this trend line breakout was confirmation for us of our theory of longs in the NASDAQ and basically just tech. Okay, And so the whole theory was if we're going to be above 503.50 on the QQQ, that this could potentially be a thriving market, and we could start to see technology outperform again. Okay, we'll revisit this slide deck later and talk about tech relative performance, but tech has been underperforming on many cases, right? And above 503.50, we wanted to start thinking that hey, perhaps we could see tech start to outperform again, and maybe we want to start be a little bit more overweight tech. And I've got a few tech positions going based off of that theory. Small caps have also been looking really, really well. This is an old chart from months and months ago, almost, 3 to 6 months ago that we posted on IWM and the Discord for members. Essentially just a nice little copy pattern, right? We had a nice base right here. We saw a little zigzag here. We're looking for a zigzag back up to those levels, and sure enough, we came right to them. Small caps look good, and on a monthly, basis, we're hitting new all-time highs. And what do we love trading, guys? We love trading these base breakouts. A clearly defined base breakout level here, and we're breaking out above those levels. The monthly time frame for IWM suggests that we can head up towards 290. Again, this is a monthly time frame. I'm not telling you guys next week or by the end of the year, IWM is going to be up above 290. But as long as we're up above these monthly close breakout levels here, the Russell 2000 looks good to head towards 290. Now, we've also got the equal weight recently making new all-time highs. So again, I'm just kind of emphasizing the point that, hey, maybe valuations are stretched here. Maybe things do seem a little bit frothy, but there's really nothing bearish about all of these different sectors, all of these different areas hitting new all-time highs, even looking at an equal weight, right? I mean, the equal weight, we talked about, hey, we love buying these base breakout patterns. And what do we love even more? When we see a bullish continuation pattern above a base breakout level. And that's exactly what we had here, breaking out to new all-time highs on the RSP equal weight S&P 500. And as I mentioned before, you may think that it's only technology that's been pushing the market higher, that's pushing the equal weight index higher, that's pushing the market cap weighted index higher. But look at financials. I mean, you can't tell me that this doesn't look like some type of AI stock. I mean, look at how ballistic this thing has gone here recently. The candles just speak for themselves. Look at industrials, okay? And when you zoom out even further and you see, what do we see? A very, very clean breakout. We had a little bit of a false breakout here. False moves tend to lead to fast moves, and so that led to a sharp sell-off. But once we cleared those breakout levels again, we just continued up higher, and industrials have been making new all-time highs here recently. Transports finally breaking out. Think about this for a second, right? Think about the economy and how the world works. You've got all these different industries. You've got companies that manufacture things, right? So industrials. Then you have the companies that transport those goods that are made. That's the transports, okay? So if you're seeing industrials performing well, you would want to see transports performing well also as a sign of confirmation, okay? And they like to call this the Dow theory, where you take a look at the Dow Jones Industrial Average, you take a look at the Dow Jones Transportation Average, and you want to see them both moving in the same direction. Generally, if you see one of them diverging from each other, well, then, that's not necessarily, confirmation of your thesis or your theory. And what do we have here? I mean, we're breaking out. This could be a false breakout that leads to a fast move to the downside. Okay, so keep that in mind. Like we saw in industrials here initially, where they had that false breakout, very sharp sell off afterwards, and then they skyrocketed higher. Here we are in the transports breaking out, retesting those breakout levels. And so the big question now is, hey, do we retest here, continue up higher, or could this potentially lead to a fast move that calls, a false move breakout leads to a fast move to the downside? That's a potential warning sign for this bull market that we're in right now. Right now, we're not seeing too many bull warning signs, right? We're seeing a lot of signs of maybe we're frothy, maybe we're a little bit overbought, etc. But we're not seeing anything telling us that we are about to crash and go down 20, 30, 40, 50% in the SPY and in the QQQ. Technology is finally hitting new all-time highs. Okay. This is the XLK, the monthly chart, right? And what do we see? Huge long-term base leads to a sustained rally up here. Then we see a shorter-term base, sustained rally. Perhaps this 240 level is an area where we're forming a nice base and can break out Long term, XLK looks like it's heading to 345 to 380 in this secular bull market. But back to the relative weakness in technology. So we talked about that QQQ chart, that NASDAQ chart. This is when that chart peaked, okay? The summer highs in the NASDAQ. And since then, okay, this chart is XLK divided by SPY. So when this chart is moving up, it means that technology is outperforming the S&P 500, which is very common to see in bull markets. And when this chart is going down, it means that technology is underperforming the S&P 500, which typically you don't see that in a bull market. And look at what we've got, guys. Since the summer, technology has been underperforming the S&P 500 on a relative basis. So what does this mean, right? Is this a big warning sign that things could potentially head lower and that the S&P 500 is going to crash? My theory on this is that actually we could actually start to see some of that rotation, right? We looked at those industrials charts. We looked at those financials charts, right? Those were just a couple sectors that I grabbed. There's lots of sectors that have been looking really well in the market. And perhaps now we start to see a little bit of rotation out of that back into mega cap, right? Back into some of the large cap technology stocks, because as we see, the evidence is here that that has been underperforming relative to the S&P 500. And what better way to measure this than via the Mag 7, right? The Magnificent 7. If you're looking to see if investors are flocking towards large cap technology, big cap, the Magnificent 7, there's actually an ETF, MAGS, the Magnificent 7 ETF. And we talked about it before, guys. Bullish continuation pattern above a base breakout. We love these. Went long on the mags, posted the trade idea, and it's gone up 6 trading days in a row. Now, is that something sustainable, or are we going to go up another 6 trading days in a row? It's possible, but not likely, right? What's more likely is that we start to see a little bit of consolidation, potentially even a pullback. And at that point, we'll have to see, if buyers can step in and continue the trend up higher. But there's nothing bearish about new all-time highs, right? I mean, look at this closing candle here. There's not even a wick on the top. Okay, so we closed at the highest price, on the Mag 7 ETF, which is a great sign. Okay, and that kind of just leads me to the theory that we could see Mag 7 and large cap tech return to dominance towards the end of the year. Okay, think about this. Let me paint a picture for you guys, right? You're a portfolio manager, you're an asset manager, right? You've got private wealth clients, different things like that. They're looking at you, and you're going to have to get your report ready, right, for your performance of the year. Do you really want them to look at you and say, "Hey, how come we don't have any Tesla? Wait, we don't have any Nvidia? We don't have any Amazon? You mean these stocks that are making 52-week highs, all-time highs, and we don't have any exposure to that? Why am I giving you my money, right?" Oh yeah, you did good in financials. Maybe you did good in industrials, but people know the big names, right? And they're going to look at those and they're going to say, why aren't we in those, right? And these are some of the top performing stocks in the S&P 500. How come we don't have any exposure to that? And so what they do is they chase, all right? And we talked about it in a previous video, but the odds of betting against the chase, okay, and the chase meaning, hey, I don't have enough exposure to this stock, or I don't have any exposure to this stock, and I need to chase into that, okay? Because at the end of the day, these portfolio advisors and people like those working, at financial institutions and firms and things like that, they're real people. They're regular people too, okay? And so you've got to think about it in the same way of, okay, if you've got some deadlines from a boss coming, or you've got some expectations from an employer or a manager or something like that, and you know that you're not meeting those expectations, well, what are you going to do? You're going to scramble and chase towards whatever you can do to meet those expectations to keep your job, okay? Because these people, they make their money off of managing your assets and wealthy individuals or firms' assets. And if they want to continue having that job, then they do these certain things, right? And there's certain types of behaviors that you see. And this is one of the psychological aspects of the stock market that sometimes people overlook. And one of the main reasons that you tend to see the quote unquote Santa rally, Santa Claus rally, and things like that, and why December typically is a good market, a good time to be in the market, especially if you've been trading over the last few years, 2, 3 years. You've seen how December has performed, and it's been a pretty good time to be in the market. So I wouldn't expect that to be anything less. We could not gain anything else in the S&P 500 for the rest of the year, and it would still technically be a good December. But the odds of betting against the chase, okay? And so the whole theory is not to be long everything in the market, not to tell you guys that you have to buy everything right up here, right at this moment, but rather, if you're trying to call a peak right now and call a top right now, there's just no reason to bet against all-time highs. I've showed the data, I've showed the statistics many times before in the past, but new all-time highs are bullish for the market. The odds when you look at 5 day, 1 week, 1 month, 6 months, 1 year out, they are generally higher. Okay, the odds of a return higher are much greater than the odds of a return lower. So keep that in mind. Hopefully you guys enjoyed this video. Smash that like button, subscribe to the channel, and help me get to 10K subs. Okay, I'm trying to get to 10K subs by the end of the year. Not sure if I'll get it, but I would really love it if that can happen. Sign up for that newsletter. It's completely free. If you enjoyed the content in today's video, you're going to love the newsletter. I'm putting out really great, amazing content in there. Free trade ideas also as well. Join the Investment Intelligence Private Trading Group. Use that promo code Powell. Promo code Powell will get you a discount on full access. It'll get you a discount on the Zone Finder if you want just the Zone Finder, or just the Pulse Radar if you want just the Pulse Radar. Okay. Inside with the full access, you get 20 plus swing trade ideas every week, custom scripts and indicators, exclusive intel, and exclusive chart layouts. Again, the Pulse Radar typically being for someone looking for short-term swing trades, okay? Short-term meaning less than 3 months. And then the Zone Finder is going to be typically, for people looking to be very active, looking for extremely short-term trades, right? Intraday to swing, meaning, sometimes these trades hit their profit targets in 1 day. Sometimes it takes a day, sometimes it takes 5 days, right? But the Zone Finder will be for people looking, to actively create new trade ideas. The Pulse Radar is going to be for people, who want to be swing traders, a little bit less active, swing trading from 90 days or less, right? I do want to mention as well, if you ever feel like you need that personal touch from a coaching session, okay, you can click on my Ko-Fi page. There's a link in the description for that as well. All right, click on the commissions tab in there, and you can book a 30-minute or a 1 hour coaching session directly through that link. They also have this buy a coffee button, basically, a cool little way to leave a tip or donation for all the free, valuable content I put out, such as the newsletter and such as these YouTube videos. Thanks again for watching, and I'll see you in the next one.